you struggling to trade part-time while working a full-time job? Then this video is made for you. I'll be talking about my personal part-time trading routine that has allowed me to eventually quit my 9 to 7 job and become a full-time day trader. I'll also share some amazing strategies and tools for part-time trading, best practices and rules for traders of all time zones, and a list of deadly mistakes that you definitely need to avoid. My name is Shay, aka Humble Trader. Over 8 years ago, I had a real job. I was learning to trade part-time while working my dreadful 9 to 7 job in the VFX and film industry. However, through a lot of struggles and breakthroughs, I slowly grew my trading account on the side, and I'll be sharing that with you today. Whether you plan on quitting your job to become a full-time trader, or you want to stay doing this part-time as a side hustle and another source of income, you will definitely learn a lot in this video. If you appreciate my efforts in sharing my stories and tips for you, instead of spending my time cruising a Lambo and laughing to the bank, then please remember to drop a like on the video. I'd really appreciate it. First, let me share with you my exact part-time trading routine from years ago when I had a 9 to 7 job. And yes, I did say 9 to 7. If you have a 9 to 5 instead, you are so lucky. But remember, at the time, whether I worked hard or slacked off and watched Netflix all day, stayed busy or not in office during my 9 to 7 job, I was still guaranteed a paycheck at the end of the day. I never had a risk of losing money, just a risk of losing my soul. As you probably know, I'm a trader living on the West Coast. When I first started as a beginner day trader, I was living in Los Angeles, and then later on I moved to Vancouver, Canada. Since I lived in the West Coast time zone, that means I'm 3 hours ahead of the market. And don't worry, I'll still give you tips for other time zones later on as well. My typical morning will look something like this. I'll wake up at 5 a.m. Pacific time in the morning, which is around 8 a.m. market time. By 5:15, I'll be at my trading desk and starting the pre-market trade planning process. I'll start out with scanning for stocks to trade with my pre-market scanner. I'm looking for stocks gapping up or gapping down huge overnight. Obviously, the trade planning process doesn't stop there. I'll proceed to reading the news on these overnight gappers. Are these stocks gapping up because of new 500 million contract from the government or due to earnings beat? Or are the stocks gapping down due to the overnight market fearful conditions, or did they miss big on earnings? So after I've selected a handful of stocks, then I'll eventually spend the time charting out the levels and planning out all the strategies I'll use to trade them. That means I'm basically spending the entire 5:15 a.m. to 6 a.m. my time to plan out the trades I would execute at the market open. I know some of you might be wondering right now, but Shay, what about pre-market trading? The answer is I rarely traded pre-market. The reason is, for the strategies I personally traded, I need a lot of range and volume. I know 2020 and 21 really spoiled a lot of traders. Those were the 2 years that were indeed amazing times to trade during the pre-market session. I definitely participated in that as well. However, those 2 years aside, I find that I don't execute that well during pre-market because of a lack of liquidity during that time. And also keep in mind, you cannot place stop-loss market orders in extended hours trading. So in order to avoid execution errors, slippage, and bigger than expected losses, I really prefer to take the pre-market session as the time to refine my trading plans for the open. At the time, many years ago, I strictly focused on long strategies. I didn't quite know how to go short just yet. And whether you are a long bias or short bias trader, the opening 30 minutes to an hour is when you get to execute some quick trades and be done for the day, and you can head out to work. Note I said quick, but not easy. And if you're wondering right now which strategies I traded and which tools and scanners I used, I'll recommend that later on, so make sure to stick around and find out. Now from 6 a.m. to 6:20 local time, I'll take a quick coffee break and do some quick stretches and get ready for the market open. Once the bell rings at 6:30 a.m. my local time or 9:30 market time, I'll trade and take advantage of the volume and momentum within the first hour of the day. From the earlier trade planning sessions we talked about, I would have around 4 stocks on watch when I was trading part-time. But really, even with those 4 stocks on watch, most of the time I really only execute on 2 trades. And in case you were wondering, no, I didn't have all of these screens and real estates that you see right now when I was trading part-time. My setup many years ago was very simple and cheap. I had one laptop with one external monitor connected. I started out using a MacBook Pro running Interactive Brokers and Thinkorswim. However, I eventually upgraded to a PC to be able to run more advanced broker platforms with faster executions. If you're just starting out part-time, I really recommend keeping your setup really simple. Just have enough screen real estate to focus on one stock at a time. And no, I do not recommend trading on your phone. I actually have a story for that later on. My trading in the morning would end around 8 to 8:30 in my local time, which is around 11 to 11:30 market time. And that's when I'll hurry up, close my positions, and pack up my things to go to work. And as you may have guessed, most of the time I end up showing up to work late, by about 30 to 40 minutes. But hey, as long as no one found out that you're sneaking in from the back door at work, it's totally fine. I really hope none of my previous bosses or managers see this. Otherwise, it won't look too good.
Actually, who cares? That was like years ago.
I am not suggesting that you go to work late, by the way. I'm just suggesting that, hey, maybe you could perhaps maximize your time and productivity while increasing your earning potential. Even though I used to show up to work late a lot, my managers know that I was really efficient and I could still meet all of my deadlines, so my work never suffered. All jokes aside, please remember to do your job and yes, keep your job. Please, because you will need that stable employment income from your job in order to trade well, especially if you're still learning as a new trader. Now going back to my routine. During the day while at work, yes, I will still check on the overall market condition on my phone. But generally speaking, I do not trade while at work. And even if I do, I'm just closing out the rest of the position that I had already entered from the morning. I would only leave large cap or mid cap stock positions on while I'm at work. I never like to hold on to small caps or low float penny stock positions for an extended period of time, especially when I'm not watching. These low float small cap stocks are way too volatile and unpredictable. Their volume can drop significantly midday and slowly bleed out in prices for the rest of the day. Or once every blue moon, they'll trap below VWAP and rip into the afternoon and squeeze out all the shorts. So generally speaking, I believe that having all of your day trades closed out before going to your full-time job is the way to go. Whenever I did that, I felt way more at ease and I could fully concentrate on my job without any distractions. Imagine if a stock drops due to negative news in the middle of an important call at work. Or imagine if you walk into a meeting thinking that, oh, you're up $1,000 on your long position. And after the meeting ends 1 hour later, you see a red negative $3,000 because your best friend, Jay Pow Pow, said something hawkish after reviewing some economic data. Yes, something similar actually happened to me many years ago during a meeting, and I had to sit through the rest of the 5 hours at work. Every second was a torture, knowing that I would make $200 by the end of the day, and that's not even enough to cover 30% of my losses. So guys and girls, please learn from my lessons. Whether you are a part-time trader or full-time trader, neither of which means trading all the time. So after that incident, I personally didn't want to take that kind of risk anymore if I cannot fully concentrate on the ticker. Whether you want to manage your positions on your phone or desktop and have a stop-loss order in place, that's entirely up to you. I'm just sharing some of my tragic story here to provide some reality check. During power hour from 3 p.m. market time to close, which is around my lunchtime at 12, I actually did not actively day trade all that much. Most of the time, I'll end up spending the 1 hour looking for stocks that are closing strong on the day and holding key daily levels on my phone or on my computer. And if I see some stocks that has a good chart, good strength into the close, then I will look to buy the stock and swing it overnight or the next few days. We'll be talking about this strategy in a little bit. This will be great for part-time traders who are still under the PDT rule as well. But the work doesn't stop there when the market closes at 4 p.m. Eastern. If you haven't noticed by now, this trading part-time while working a full-time job hustle actually requires full-time effort. So at the end of the day, after getting home around 8 p.m. my local time, I will spend about 2 hours before going to bed on stock research and analyzing the top movers on the day. See how each of the gappers I had on watch from the morning performed. Some additional homework I would do in the evenings are planning out my levels on the charts, journaling trades from the morning into my journal, and watch any video lessons from the trading communities that I was in, which was a great way to help me prepare for the next morning. This way, I can really speed up my pre-market trade planning process the next day. Remember, trading is 90% about the work you do outside of market hours. So that was an extensive breakdown of my part-time trading routine from when I had a full-time job. Now let's move on to talking about some of the key strategies and tools that you can use to optimize your part-time trading. But before we do so, if you're enjoying the video so far, please remember to gently tap the like button. These videos sharing my stories and tips to help you out really take me a long time to make. I would appreciate your support so I can make more educational videos like these in the future. So here are my long strategies for part-time trading. As mentioned earlier in the video, when I was trading part-time, I mostly focused on going long, meaning buying the stocks to sell higher. I would buy the dip on strong stocks with positive catalysts most of the time, and sometimes I would join the trend instead of buying the dip. A very important part of this strategy is to be able to find stocks with strength and high volume that are potentially great for your long setups. So that's why I set up my scanners to look for the highest percentage gap and the highest volume on the day. Both of these are some of the most important technical criteria that you can scan for. In my first year or so trading as a beginner, I didn't have the money to purchase additional scanners. So here are my recommendations for free market scanners that you can use to find suitable gappers for the long strategies or joining the trend. And the free scanners are Webull Stock Screener, Thinkorswim Pre-Market Gap Scan, and FinVid Screener. They are not perfect, but they will be able to find most gappers every single day. And speaking of Webull, they're running a promotion right now, and you could get up to 12 free stocks. You'll get 2 free stocks valued up to $300 after opening an account, and up to 10 more free stocks valued up to $3,000 after depositing any amount of money. This is basically free money. So if you're looking for free live market data and free pre-market scanner, now is the perfect time to check out Webull and get some free stocks down below. So I was using free options for a while, but after about 2 years, I transitioned to paying for premium scanners, and that was a game changer. I can do so much more than just scan for stocks now. I can find all the average volume, float, market cap, short interest, average daily volume, all within a few seconds. This honestly saved me so much time, and especially when every second counts as a part-time trader, paying for premium scanners really allowed me to build my morning watch list faster and more efficiently. I have been using and paying for Trade Idea Scanner for many years now. I highly recommend it. You can download my scanner settings down below and try them out. If you're trading part-time and need to speed up the process every single day before going to work, this is worth it. Now moving on to a second strategy I would highly recommend for part-time traders to build your account is swing trading. When I had my full-time job, there were periods of time when I was just so busy working overtime for certain film productions that I just couldn't bring myself to wake up at 5 a.m. in the morning after staying late to work till like 9 or 10 p.m. So that's where I developed this backup strategy for swing trading. There were 2 kinds of swings that I would trade. The first one is an overnight swing strategy. I will use a lunchtime break around 3 to 4 p.m. Eastern Time to find the top gainers on the day. Again, you can do that easily with free or paid scanners that I mentioned earlier. After that, I will study the catalyst on the gainers, rule out any of the ones that doesn't have news or only has fluff news, and only narrow down to one single stock. This has to be a stock that's closing strong on the day with really bullish news that's likely to have continuation for the next day or even the next few days. That's when I'll buy the stock overnight. However, in recent years, I find that I swing overnight less and less. Now I prefer to open swing trades that would take a week or more to play out. I would pick stocks that are consolidating on the daily chart and is a part of a hype-up sector with a lot of chatter and optimism. A perfect example is my recent AI stock swing trade that I mentioned in the ChatGPT video. I bought the stock at around $20 to $21 and swung it to $26 for a nice 24% profit in 1 week. This swing trading strategy will be especially valuable to the traders in the US who are under PDT rule and trying to grow their small accounts while working their 9 to 5 job. Remember, if you buy a stock and hold it overnight and sell it next day or the next couple of days, that will not count as a day trade for you. Now let's talk about how to execute on these day trading and swing trading strategies I mentioned earlier. I really recommend you to check out OCO orders on your trading platform. OCO order stands for one cancels the other order, also known as bracket orders. Essentially, this allows you to manage your existing position when you're on the way to work or at work. If you really must trade at work, you get to set a live take profit order and a stop loss order at the bottom. Let me show you an example of how OCO order works. For example, let's say you're long on Tesla stock on this particular day. You're already long at 195 over here, let's say around 950, and you need to go to work. Let's say you already sold some at 197, but you really think the stock is going to continue trending up higher and do what Elon Musk loves to say, to the moon. Well, instead of leaving your position open and risk coming out of your work meeting with a $3,000 loss, like what happened to me, you can use an OCO order. So the first order you're gonna set is a take profit on your platform. Perhaps you think Tesla has room to, let's say $200 on the daily chart, then that's the first half of your OCO order. You're gonna set a sell limit order at 200 over here. So over here, that's a sell limit of your remaining position. But remember, you also have to protect your downside as well in case the stock drops midday. So the second half of your OCO is a stop loss market order. Let's say you got in at 195 and you only want to risk 50 cents from 195. So you'll set a stop loss market order at 194.50 over here. This OCO order will be perfect because if either one of the take profit on the top at 200 or stop loss at 194.50 gets hit and triggered, the other one linked will be cancelled automatically. Hence the name one cancels the other. It depends on your platform, but this is what it looks like on DAS Trader. So over here on the montage window, you can see the stop loss market order. Stop loss at 194.50, that's your trigger price, and that's set to market, okay? That's your stop loss order. And down here, this is my take profit. You can see I'm selling 1,000 shares at 200, and that will be limit order or whichever route you're using. And make sure your OCO is checked on. So that's how you link these two order pairs into an OCO order. And that's the reason why OCO orders are also known as bracket orders, because you have an order limiting your downside below while the other one is helping you take profit above. Remember to use market orders for your stop losses. Whether you are long biased or short biased, you're basically never safe, leaving these day trades on without proper stops. Besides the tools and strategies I mentioned earlier, here are some very important tips from me to you. If you're a part-time trader at the moment and looking to trade well, generate some consistent profits while working a full-time job, you will want to learn from my costly mistakes. The first one is important, and I know you won't like hearing this. Know when to walk away from trading. It's not necessarily hard to make money, but extremely difficult to keep it. When I was trading part-time, I find it very hard to shut down my computer and pull myself out of the market to go away to work. If I had a good day and the market is really hot, I will want to keep on pushing and really try to make more money. But if I had a bad day, then I would want to stick around longer to make back my losses. Both of these situations will lead me to overtrade and give back all my morning gains. Or even worse, make me lose even more money than I already had. As a part-time trader with a full-time job, you shouldn't have to push all that hard every single day. So remember to take it easy and slow down. Put in the hard work, yes, but the market is going to be open again tomorrow. Take the meat of the move and run. This is true for day trading and swing trading. There were many months in the past before where I just couldn't find any good potential swing trades to hold overnight or a few days. I used to force those trades and lose money. Those were really stupid mistakes on my part, so I really hope you don't do the same. The second important tip I have for you is, do not quit your job. I know you might not like hearing this once again, but I'm just being realistic here. Do yourself a huge favor and keep your job. Contrary to what a lot of lifestyle marketing around the whole day trading industry tell you, quitting your job altogether to day trade is really not as glamorous or as easy as it may seem. Well, yes, I did hate my 9-to-7 job just like most people. Keeping that job really meant I had predictable employment income and some financial stability, which were key factors to allowing me to trade well after quitting the chat room alerts and slowly build up my small account over time. Because let's be real here, you can spend 8 hours a day day trading in front of the computer, but you're not guaranteed a paycheck. You can even lose money. But that 9-to-7 job you go to every single day is guaranteed income. Having a stable income source you can count on will provide you the mental comfort to take trading slow and easy and allow yourself more time to learn. And yes, your employment income will be paying for your market tuition at the same time. It's unfortunate, but losing money is part of the business in trading in the beginning. It's inevitable. The key is to control your losses and keep them small. And the only way you can cut your losers small and follow risk management is if you are not too attached to the money, because you have your full-time job to pay for your rent, food, and providing for your kids or family. Now, I'm sure some of you are thinking,
okay, Shay, your part-time trading routine works well for you because you're on the West Coast. But what if I'm closer to Eastern time zone?
While I've never lived and traded there for an extended amount of time, I do have some tips after gathering information from other traders in my community. The first tip for you is actively seek to work from home. After 2020 and 21, most workplaces will allow you to work from home at least 2 days a week. So make sure to organize your work and trading schedule and block out your time accordingly. The second tip, if you really cannot work from home, then at least negotiate a different starting time. Instead of starting to work at 9 a.m. Eastern Time, see if you can negotiate to start at 11 or 12 p.m. and just stay later on to 7 p.m. or 8 p.m. Yes, I know, that means no more partying in the evenings or dining out. Like I mentioned earlier in the video, it all comes down to sacrifices. Do you want this bad enough? Maybe it means just going out a little bit less on the weekends, eating out only once or twice a week, and sleeping only 6 hours a day. But of course, if everything I just talked about sounds like too much effort and too much work, there's still hope. My answer to that is chat room alerts, baby. Takes only 2 minutes to make millions. Works well perfectly 1% of the time. If you're a part-time trader looking for even more tips to optimize your strategies and increase your profits, then you should really check out my recent conversation with Ryan PDT, a part-time trader with a full-time job, on the brand new Humble Traders podcast, so make sure to check it out over there. Feel free to leave any questions or comments down below. Thank you so much for watching, and I'll see you in the next video.